Digital currencies staging a small comeback this morning. By noon Eastern, Bitcoin regained the 20K level, Ether jumped to $1,500, and Cardano climbed to 45 cents. Even with today's gains, though, it's been a pretty dismal month for crypto. Bitcoin and Ether are set to end August down 13% and 6% respectively, and right now, September doesn't look much better. Investors are awaiting the next jobs report on Friday, and they're also bracing for another interest rate hike from the Fed at the end of the month.
We enter into a new month with all assets markets on a decline. Traditional stocks and equities in Dow, S&P 500, and NASDAQ are all down about 4%, and month on month has lost 13% valuation. What should we be looking forward to in the coming weeks? Welcome to another expository episode on this channel. We have Lyn Alden again today to take us through the investment space. Take a moment to subscribe and click the notification bell. We're happy to have you here. Now, let's get down to business.
So you have a company or a government and your revenues are in your currency, or in some cases many currencies if you're kind of a multinational exporter, but a lot of your liabilities are specifically in dollars. And so if the dollar is going up versus everything else, it's like, imagine if you had a mortgage priced in gold and gold was like soaring relative to your house value or relative to your income, you're getting squeezed. And it especially hits, any country that is kind of unprepared for that. So if it has low reserves as a percentage of GDP, if it's very reliant on foreign investors, those types of countries can run into a lot of issues. Whereas ones that have structural current account surpluses, that have high reserves, they're more able to withstand that type of environment. And then it's challenging because this comes back and hits the U.S. as well, because if the whole world slows down due to its dollar liabilities hardening, that impacts the U.S. in a couple ways. One is that something like 40% of S&P 500 revenues are international. So all of those get translated back into fewer dollars and might even have lower sales growth just due to sluggish growth in those regions. And number two, the foreign sector generally slows down its purchases of U.S. assets, because the way that this whole thing is structured is the United States runs these, pretty persistent trade deficits with the rest of the world. The rest of the world takes those dollars and then buys, they recycle their dollar surpluses into U.S. assets, into U.S. capital markets. And so they buy treasuries, they buy U.S. real estate, they buy especially U.S. stocks in recent decades. And when they start to get squeezed, if they need dollars, one thing that a lot of those creditor nations can do is sell or at least stop buying U.S. assets. And so for multiple reasons, this kind of ricochets back into counterintuitively hurting the United States as well. And so just kind of how we've structured the global financial system, especially over the past 50 years or so, kind of creates this environment where if the dollar is going up, almost nothing else is. And if the dollar is going down, just about everything else can generally do pretty well. And so kind of following some of the dollar dynamics, I think, is really important.
About 30% of the U.S. S&P 500 revenues come from foreign inputs, and these revenues are impacted by the economic situations of these contributing countries. Despite the dollar strengthening against most other currencies this year, this is translated to the U.S. stock market being impacted by the escalating liability costs of countries that have their liabilities in the U.S. dollar. Data from the U.S. Department of Commerce revealed that the United States benefited $330.2 billion last year from foreign direct investments. This infused new jobs and helped bolster the economy, but with the foreign exchange rates, which are not favorable for most countries in Europe and Asia, where a bulk of the U.S. FDI comes from, we're set to see a sharp decline in FDI, meaning the gains in the currency strengthening of the dollar would be lost in FDI and in revenue reparations from U.S. foreign assets.
For me, the longer term attractive areas for this decade are basically the energy sector, the value sector in general. So a lot of good dividend payers. I do like certain emerging markets. I just am careful about position sizing, especially for each individual market, because as we saw with, say, Russia, for example, you can get zeroed out of positions, even if the underlying companies are still chugging along. And so I think having that kind of globally diversified value emphasis is something I'm kind of pretty bullish on for this decade. And generally, my favorite growth asset going forward is probably Bitcoin as like a slice in portfolio. I kind of maintain some degree of counter-cyclical exposure to it. So if it's skyrocketing, I might rebalance back into the rest of the assets. And if it just fell off a cliff, I might lean into it a little bit. And because I think that while I'm not super thrilled about the broader crypto space, I think there's kind of this regulatory arbitrage that has happened over the past decade. And I think that it's like, imagine an environment where you could just sell penny stocks to the public, right? I think that's kind of the environment that has grown up around that crypto space, especially the worst parts of it. But I do think that what Bitcoin offers is kind of this, it's really innovative technology, and that I think that the network is probably going to continue to grow and strengthen. And so that's something I monitor both for its own sake as an investment, and to constantly ask myself, as this technology gets adopted and matures, if it does, what other industries does that affect, either positively or negatively? So that's kind of my overall framework looking forward when I think what do I, if I'm standing in 2030 and I think, okay, what performed well this decade, those are generally the types of assets I'm looking at.
The month of August ended with the Dow down 4.06%, S&P 500 down 4.2%, and Nasdaq was down 4.64%, neutralizing all gains in the July market rally. The traditional investments market has been highly volatile in the past few months, as everyone is trying to make sense of the conflicting economic indications against the government's responses. We are seeing a lot of growth in some industries such as AI, EVs, and technology space generally. With AI projected to reach $1.5 trillion by 2030, this is at a CAGR of 38.1%. We can imagine that a lot of supporting industries would also gain from this annual growth. But what about cryptocurrencies?
There's a lot of entities in the space that were using Bitcoin as collateral and then going out and like leverage long on like altcoins, right? So when that all blows up, a lot of those entities have to sell their Bitcoin, and that's obviously been disastrous for the market. But if you're kind of a counter-cyclical investor, if you have diversification, dry powder, it's kind of an interesting place to, like you said, it's a good place to fish. And the general story with Bitcoin over its past 13 years of existence is it generally goes up in rising PMI environments, so economic accelerating environments. It generally does pretty poorly in economic decelerating environments, lower liquidity environments, but the general trend is much higher highs and higher lows. Whereas if you look at most other crypto assets, they had the majority of them have trouble kind of gaining any sort of like structural multi-cycle momentum. They usually are these kind of like flash in the pans. They're popular for a cycle or two and then we're on to the next thing. Whereas Bitcoin's kind of been the constant in that space, and I think that there's pretty good technical reasons as to why. And if you look at the, even the, I'm a little bit involved in private investing in startups that are kind of in that space, and you'll see a pretty big divide between, say, multi-coin type of VCs and Bitcoin-only VCs. It's kind of like it's rather, obviously there's areas of overlap, but they're quite separate ecosystems. It's almost like if you look at crypto, Bitcoiners are like the value investors or like the dividend investors of the space. They're kind of, it's like two very different cultures, whereas like the other ones would be like the ARC type of things. And so it's kind of gotten a big enough asset area where you have very, very different groups within that asset. And so this is kind of just something I watch and something I'm pretty bullish on, but of course there are risks associated with it. So it's just about position sizing.
Bitcoin is inspiring new technologies, especially in payment services, such as the Lightning Network. POS service from Strike, BitPay, and even Stripe is working on a Bitcoin payment system. There's no questioning it. Bitcoin has a lot of growth potential in future payments innovations. The US dollar has consistently lost its purchasing power, so much that it has lost over 92% of its purchasing power since 1950. The charts show that the dollar has only gained purchasing power twice since this period, in 1956 and in 2010, but the gains were never double digits. Bitcoin, on the other hand, though highly volatile, and we have seen a lot of negative wavering in its value over the years, when we compare based on a dollar cost average, Bitcoin has outperformed all investment assets and financial securities in the past 10 years. If you follow this channel, you would already know that Bitcoin performance is in tandem with macroeconomic indications. This means that Bitcoin is actually predictable, though its higher and lower margins tend to be much higher than that of other markets. Lyn thinks Bitcoin remains the safest cryptocurrency to buy and perhaps the best asset to invest in. She says the most important thing is to have a position sizing strategy, so Bitcoin is not the only investment you have in your portfolio. We do not give investment advice, so we would like to hear from you in the comments. Don't forget to subscribe, like, and watch out for our next video. Thanks for watching.